The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, let's take a look at how the trade acted on the day Monday to start off the week. A fairly low volume type of day, but decent strength in soybeans and soybean meal with quarter wheat and two-sided action and mixed activity over in the livestock trade. Let's talk about it. Joining us now for a market conversation, John Heinberg with Total Farm Marketing. John, good to catch up with you. Hope you had a good weekend, and coming out of the weekend, not bad in the markets, to at least to start. Soybeans and meal, like I mentioned, kind of the upside leaders, but it felt like very low volume type of trade on the day Monday, John.
Yeah, a real quiet day today. Just, it was an up day. We got a little bit of money flowing into the corn and soybean markets. Really not a whole lot of news in that regard. So, like I said, just good to see some positive days. It's the first time we've had one in corn in about a week. And, in the bean market too, but really it didn't do anything. It was just higher. We didn't take out highs, we didn't roll them with charts up, so unfortunately just a little bit disappointing in that regard, that, we just see some Monday flow and looking for some news, and that news isn't quite there yet. So still very cautious. The market just feels like we're in a window. We still got a lot of bushels that need to find a home. And that's still just going to keep pressure on this market overall.
Well, I know you watch expiration of contracts and such a lot here at these markets, John. I know we're going to have March expiration coming up here, and couldn't maybe need to see some bushels. I know a lot of farmers are long right now in the market, so I wonder if that could be a source of some volatility here over the next couple of weeks in terms of the corn market, John.
Yeah, we talk about the managed funds positioning in terms of where they are, and they're sitting on nearly 300,000 short contracts. But the commercials and the long side of the market is massively big as well. And that's something that concerns me, especially as we get to first notice day, these basis contracts that are out there. And that can put some market pressure in really quickly if they have to roll those things out into the next month. We've seen the spread between March and May starting to widen out a little bit here over the last handful of days. So that's got me a little concerned here going into the end of the month. First notice day for March is on the 29th. And historically, we saw it happen in December. Looking back to last year, that first notice day window, now prices were obviously a lot more elevated last year than they were this year, but we lost 50 cents in the week of first notice day, in the last week of February. So there's some correlation that's there. And just from talking to people with the amount of bushels that are out there, I still have some downside targets I'm eyeballing, and we're not there yet. And that has me staying on the defensive side of this market here, at least in the short term.
Well, I have to think maybe one positive, China, South America, they're on holiday, so they're largely out of the markets this week. Maybe that could lessen some of the volatility here, and maybe potentially allow some folks to get in here and manage some risk with some different strategies. I'm just thinking out loud here, John, but I wonder if the markets are a little quieter this week, if that could have something to do with options volatility and things like that right here this week.
That could be some of it as we get into the week, and we'll see how it goes. Typically, when China's not in the market, that's not exactly friendly for the marketplace.
No.
As somebody's not out there as a buyer, we'll have to see how harvest continues to roll along for those Brazilian beans. I saw anywhere from 21 to 26% harvested, again, depending on what analysts you read. So there's still some progress being done there. But we did see the soybean premiums in Brazil come up a little bit at the end of the week. It was the first time that's happened for a while. I think maybe that was some of the spillover help today in the bean complex. Watching the meal market, really difficult closes last week, but nice to hang on to those gains today, at least to the level that we saw them, but falling back under 350 for March. Soybean meal makes me a little bit anxious, what could be in front of us on the downside there. So, this market's being driven by a lot of forces, especially in the soybean side right now. And mainly the biggest force is still the competition for South American supplies, or from South American supplies, whether it's in the bean market or the meal market, as those things are out there. And again, we have to meet those prices to keep that product moving. And the USDA making that cut on last week's report, taking that demand out of the balance sheet, to me was one of the bigger cuts of the day in terms of the ramifications or the implications of it or the sentiment of it going forward.
So, John, if I'm a producer here in this window, what do I think about in terms of my risk management? Let's pivot to that side of the equation, because I think you mentioned you still got some downside targets here in some of these grain markets. I think it's going to be ever so crucial to make sure you have a plan with first notice days coming up and things like that. So, what would you say to folks in terms of just overall risk management and having that plan ready to go here in this time window?
Yeah, that's a very difficult conversations we're having right now with guys, and what do we do with this old crop? And that's unfortunately not the minority in terms of those bushels. That's what I talk about. We just got a lot of supply that needs to kind of find a home out there. So I'm still staying on the defensive. I'm still protecting the carry. We're making sure we protect the 450 July window. Got a little bit of stuff working on D's 24 today, just kind of protecting the 470 window. Not saying we're going to be married to those positions longer term, but at least let's get some handle on those old crop supplies. I know I've talked about that before. At least get some type of floor under it and hope we're wrong and we see some market turn. But otherwise, there is still some downside potential there. And maybe the goal is not so much the risk management, but minimizing the damage that's already occurred and could occur if things continue to slide. The other little piece this week that will be coming into play is the USDA Outlook Forum. Now, again, those are baseline projections, but you just go look at the November numbers they put out there, a carryover projection for corn at 2.6 billion bushels, and that could be on the low side. Soybean side, again, they're keeping it under 300 for next year, but that was before that demand cut came out on the last report. So we could be looking at a 300, 350 type carryover projection for new crop beans. So those are going to be some numbers to watch. Again, do they move the market? Yes, no, maybe. I guess it depends how extreme they are, but it's just some more information that kind of sets us up when we start thinking about the acres in March, at least where those trend line yields are going to come in at. 52 for beans, possibly 182 on the corn side. We'll have to see if those are the numbers they go with. That's the numbers they put out there for us back in November.
I'm glad you mentioned the Outlook Forum. I think at a week where we could have a light news week, that could definitely be a big one to watch here as we go through things. And I know, too, we got a lot of economic data going to hit the markets this week in terms of CPI, PPI, things like that general economy inflation data. I think that's another piece we could watch too, not only in the grain sector, but in the meat sector as well here, John, as we segue to livestock a little bit. That seems to me like that could be an area where we have a little bit of news to impact the markets here this week as well.
Yeah, very much so. Again, the consumer price concerns are going to be one of the things that drive this cattle market as well as the hog market higher. We'll have to see what those numbers come in. Where are we at in terms of the consumer dollar? What do they have available to them? So those inflation numbers will be very, very key. You go look at cattle today. Now we're hitting the Lent window. Okay, Lent starts this week on the Valentine's Day area. So does that come into play, at least in some of the consumer demand? Historically, we do see a bit of a February peak into the 1st of March window here with some pullback. Even had that last year. Despite the rally, we had some softening for a few dollars in the same time frame. So that'll be something I'm going to be watching for. It does keep me a little bit optimistic, the cattle market longer term, just because of the pure fact that the fundamentals are still there and some weakness might be the opportunity to step back in. Now, with that, we'll have to see what those numbers give us. The biggest thing I'm watching too that's really kind of got me a little concerned about the commodity space, is that equity market. Strong move in the S&P. We're well over 5,000 on the S&P today. Dow is pushing a couple 100 points higher at midday again. Is the money just going there because there's some excitement at least moving in that marketplace? And that's something that I think can limit the commodity space overall. Again, it's just where the money wants to be. And, sitting in a core market where we're not making a whole lot on a daily basis is something that we could see, that money flow slow down and, again, just grind this market along until it's got some reason to move somewhere.
Oh, that's a good thought, good perspective on that. One other thought on the livestock side, too. I know cattle, Packers kind of blinked first late Friday. We got that big jump in cash trade. Feeders felt like they reacted to that a little bit on Monday while the fat cattle market was still trying to get a handle on things. I wonder, there's chatter that Packers might slow down chain speeds here this week potentially. I wonder if that could have an impact on the cash cattle market this week, John?
That was pretty much the entire 2023 story, is the Packers slowing down the chain. So, we'll have to watch it. Again, it still comes down to production. It comes down to the weights, where we are. I do think some of that cash trade was priced in with the strength that we had last week. Feb's trading 184, April 186, basically today on the close. Was obviously over that at the open with prices being down today. So when cash trade came in where it did, it was already covered. And so maybe that's some of the reason we saw the walk back in lives. But I think you're correct. And the other thing I'm watching too, that spread between front month, back month feeders has really been moving. It was trading 23 last week. Now it's 19.5 or 19.90 here at the close today. We're starting to see that gap narrow between like the April feeders to October. And so that's something I've been eyeballing, just thinking maybe those front end feeders, given what guys are paying out there for them, are a little bit undervalued still here. And I still think there's some good money flow there, because, again, what the feeder index is and what the cash market is and the futures market are basically all different stories, and what producers have to pay is not reflective of what we're seeing here in the board.
John, great thoughts. Final thoughts from you as we wrap it up here on today's show. What do you want folks to remember, and what do you want to reiterate to them here as they watch the markets this week?
Still get a handle on bushels. If you're free to the market and there's still downside here, having puts in is not a horrible strategy. And let's just hope you're wrong and prices start working higher. But at least if things fall apart, something can happen on the geopolitical level. Things could go aggressively. Like I said, I've got a target down to about 415 for December corn, maybe a little bit, or March corn, maybe a little lower. But I've seen targets all the way down into the upper threes, and so if those types of moves happen, that's still a solid 80s or 50-cent move from here. And so that's just places where you say get prices under control. Soybeans still look scary to me overall. Again, controlling prices there is a key. You still got the Brazilian beans trading 60, 70 cents under the front month contract for export prices, and we're still positive on that basis here in the United States. So we're about $1.50 underneath. So those export sales numbers could dry up even more so, which would put a lot of pressure on this market.
John, good thoughts. If folks want to reach out to you, get some advice there at Total Farm Marketing, how can they get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John Heimberg, always good to chat with you, my friend. Thanks for joining us on Market Talk today. Have a great week. We'll talk to you again real soon.
Sounds good. Have a great week.
John Heimberg there with Total Farm Marketing. That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.